If you're on Medicare, there's a chance you could be paying hundreds of dollars more every month compared to someone with the same exact coverage. And the worst part is, most people don't even realize that it's happening. And it's not a scam, it's not some kind of billing mistake, it's something called IRMAA, or most often referred to as IRMAA. IRMAA or IRMAA stands for Income Related Monthly Adjusted Amount. And for some people, it can increase their premiums by hundreds of dollars every single month. In this video, I'll explain what IRMAA is, how it works, and why it surprises so many people, and what you can do if it is affecting you. Hey everybody, my name's Eric and I'm a licensed Medicare agent. Now, one of the biggest mistakes that I see in Medicare is people thinking that everyone just pays the same premium across the board. Many people assume you turn 65, you enroll into Medicare, and then everyone pretty much is just paying the same premium and you just go from there. And sometimes this can be true, like in similar plans and things like that, but it's not always the case. In reality, what you pay can vary quite a bit depending on your specific situation. For example, two people living in the same area with relatively similar plans can end up paying very different monthly premiums. So what causes that difference? And that's where IRMAA comes in. Now, what is IRMAA? Now, this can sound pretty complicated at first, but it's actually quite simple. So what it is, it's an extra charge added to your Part B and Part D premiums if your income is above certain levels. But here's the kicker, it does not change your coverage. It doesn't give you extra benefits, and it doesn't change your doctor's network or pharmacy or things like that. All that it really changes is what you pay. Think of it like this. For most people, the government covers about 75% of the Part B cost. But if your income is higher, the government covers less and you pay more. And for this reason, your premium can increase. But now, how much can it increase? Well, in 2026, the Part B standard premium is $202.90 a month. But if IRMAA applies, that amount can go up significantly. And in some cases, it can be close to $700 per month. So it can jump quite a bit. And that's per person. So if you're married and both of you are on Medicare, you could be paying a lot more in premiums. On top of that, there's also an additional charge for Part D, and that can add anywhere from between $14 to $91 a month to your monthly premium. So depending on your income, a couple could end up paying well over $1,000 a month in combined premiums. And again, this is for the same coverage. But here's where it gets even more confusing. Medicare doesn't use your current income to calculate IRMAA. What it uses is your income from 2 years ago. So your 2026 premiums are based on your 2024 tax returns. For many people, this may not be that big of a deal, especially if your income is relatively consistent. But if your income has changed, this can create a large surprise. For example, let's say a couple took a large withdrawal from a retirement fund several years ago. Let's just say, for example, they took out $175,000 to go ahead and pay off their house. That one decision would then increase their income for that given year. And now boom, 2 years later, their Medicare premiums are much higher. And that's even if their income has already gone back down. So things like selling assets, Roth conversions, or large withdrawals can all have a major impact on the premiums you'll pay in the future. So now you know IRMAA can increase your monthly Medicare premiums, and that it's based on your income from 2 years ago. But here's what makes it even more frustrating. A lot of people don't even realize that they're paying it. Now, IRMAA doesn't show up as a separate bill. It's actually built directly into your Medicare premium. So if your Medicare premiums are deducted from your Social Security, for example, you might just notice smaller deposits and not even know why. On top of that, the notices that you do receive can be a little confusing. And that's because multiple agencies are involved, like the IRS, Medicare, Social Security, and the communication always isn't super clear. And so many people just go on assuming, well, that's what Medicare costs. So if you think you might be impacted by this, here are some simple ways to check. First, look for your Social Security determination letter. This usually arrives near the end of the year and it outlines your premiums. Second, review your Medicare premium amount. If it's higher than the standard Part B premium, there may be an income-related adjustment. Third, look at your tax return from 2 years ago. Your modified adjusted gross income, or MAGI, is what's used to determine IRMAA. For example, in 2026, if that number is above $103,000 for an individual or $206,000 for a married couple, then IRMAA may apply. And fourth, ask yourself, has your income gone down since then? If your income has decreased due to a quality of life event, such as retirement, divorce, or the loss of a spouse, you may be able to request a new determination. And this is done using a form called the SSA 44. On that form, you'll describe what changed, give them your updated income, and provide any documentation necessary. But with that being said, it's important to understand that not every situation qualifies. But in the right situation, this process may help reduce your premium without having to wait the full 2 years. So here's the key takeaway. IRMAA can quietly increase your Medicare premium by hundreds of dollars per month without you ever realizing it. It's based on income from 2 years ago, and it happens automatically. So if your premium seems higher than expected, it's worth it to take a closer look and find out what has changed. So check your notices, review your income from 2 years ago, and if your situation has changed, look into whether you can qualify for a new determination. Now, IRMAA is just one of the ways that people end up paying more than they need to for Medicare. There are several other common mistakes which can affect you and impact you not just one time, but for several years. So watch this next video here to find out what those mistakes are and of course, how to avoid them.